Welcome to the Jill on Money Show. It is Sunday, July 30th, and we are here talking to you about the issues that matter most. And it's not about your money. It's about your life. That is why the subtitle of my book is Change Your Work, Change Your Wealth, Change Your Life. Because so many of the decisions we make in our lives have to do with weaving in the financial aspect. So if you would like some help in doing that, you can come on the air with us. Just go to jillonmoney.com, click the Contact Us button, tell us a little bit about what's going on. And if you're shy and you don't plan to come on the program, give us a lot of details. Otherwise, check the box marked as everything else. While you're on the website, check out all the other great content. There's lots of free stuff. There's the blog. There's the video section. But if you are feeling generous, do try to support my Cycle for a Cause. That is the Boston to New York AIDS ride. And we hope that we get as many small dollar donations as humanly possible. Okay, today we are talking to William, who's on the line from New Jersey. Welcome. What can we do for you?
So I sent an email asking about traditional or Roth contribution to my 401k. A little info about myself. I'm currently married. I make $82,000 a year. My spouse makes $62,000 a year. However, I actually have some interesting incomes that kind of makes this question a little difficult for me. One of the income is a per diem. So every day I work on my job, I'm getting a specific amount, which is about $185 a day. Mm-hmm. And at the end of the year, I typically get a bonus. So that gets my compensation just for myself up to about $176,000.
176 for you, just you.
Just me. That's correct.
Wow.
Yep. And then my spouse is still at $62,000 a year.
So that trajectory where, you have a base, but then you also have per diem and bonus and all that. You're a W-2 employee though, right? In other words, you're an employee, not self-employed.
That is correct. Yes.
Okay, got it. So now it's not so simple, as you say, because, you make almost 240 grand a year together. And that's kind of a good chunk of money. Tell us some more about what else is going on.
Sure. So, like I said, my spouse makes $62,000 a year, but she's a resident physician. So in about another 2 years, so that income is going to go up as well, approximately maybe $250,000 a year.
Oh, boy. I mean, great. I shouldn't have said that way. Hey, that's awesome. I mean, really, it is completely awesome. And you're going to make a lot of money. You'll pay a lot of taxes. So that's that. But let me ask you a question about the current game plan here. Let's just talk about the next 2 years. Because is it likely that you're going to make about this amount of money together, this 240-ish? Or do you think it's going to go up in the next couple of years also? In other words, I'm just trying to figure out whether I think you're going to stay in. Are you going to probably stay in the 24% tax bracket until she becomes a full-fledged attending physician?
Yes.
Okay. And what are you doing for retirement?
Right now, we both contribute to Roth IRAs outside of work, so we have to do a backdoor Roth contribution. Through work, she does about 10% through a Roth 401k. And I'm currently, and I've been doing this for the past 2 years, that's why I have this question, is I've been doing about 18% on my Roth 401k.
You both are using Roths through work, right?
Roths through work, that is correct, yes.
Okay. I like that as a game plan. I think that is the right decision, at least for the next 2 years, for sure. Like, there's no doubt in my mind. Oh, and how old are you guys?
So I am 29, going to be 30. My wife is 26.
You're so young and you're making so much money. God bless you. Tell me the first few years while she's a doctor, like, what do you think your income's going to be total? Like, I just want to look forward in like 5 years from now. What do we think your total income is going to be?
I think 5 years from now, we're looking at the mid 300s. Or a little bit above that, but to be conservative, mid 300s.
Because that does pop you up into the 32% bracket. And at that point, I think we have to make a different kind of a decision, which is, we'll know a lot more about the tax code, obviously, but I don't know whether or not it's going to make sense then to be using the Roth as much I mean, I'm sort of inclined to say yes. The reason is that even if you are in the 32% tax bracket, it might be nice to have some of this money that's taxed already. And is she going to be the kind of doctor that makes more and more money? Or do you think that, I don't know, a lot of doctors I know, they complain they don't make any money, but they do make more money sort of in their 40s than in their 30s. So is that the kind of doctor that your wife is going to be, you think should make more money later on?
I think it's going to be a slow progression. I think it's internal medicine, so it's going to be more of a base and slow progression type compensation.
And what about you for your own career? Do you feel like you have a lot of upside yourself?
I do have a lot of upside. And one thing the reason why I also wanted to ask this question was the wild card out of my compensation is my per diem, right? So the reason why I get that per diem is because I'm currently working in New Jersey versus where I got hired for my role, which is Kansas City. By relocating, I get compensated to adjust for cost of living, and so that is a wild card that might not be there in the future.
Mm-hmm.
Unless I'm in New Jersey, that is going to be somewhat of a factor. Really, I know the answer, because I'm an engineer. I feel like it makes sense to contribute to the Roth. But when I'm looking at it from a cash flow perspective and how much tax I pay per year, I'm trying to understand, does it make sense to actually have any form of, tax deductible contribution just to reduce the taxes? And then especially, like you said, when we're making, the higher income in the future.
Well, I'll tell you, for the next 2 years, definitely the if you run the analysis, you'll be like, oh my God, it's a no brainer. And I know that you know that because engineers are very good at that. However, you're also a human being, which is too bad for you because what you do is you look at your tax bill and it makes you nauseous. And you're in a high tax state. You guys have any kids yet or not?
No kids yet, no.
Okay. You own a home?
Yes, we own a home, yes.
All right. But it's not that great because you've got the state and local tax cap at 10,000. So you're not getting such a great bang for your buck. That being said, I know that as long as you're in the 24% tax bracket, we're going Roth all the way. I think we just need to figure out, and we'll be here for you. We really need to then say, let's see where the tax rates are. Let's see what's going on. Let's see if it makes sense. And we won't know that. You're doing a great job. You're putting away a lot of money. And that's exactly what you should be doing. Do you have an emergency reserve fund that's just, in case you decide you're sick of New Jersey and you want to, go back to Kansas City?
Yes, yes. So my wife and I, we have about a 6-month emergency fund, and we actually also save after tax in the brokerage account as well. So I'm one of those people that trying to retire as early as possible. So I'm taking advantage of everything that I can take advantage to invest right now. So
listen. She has to go to school for 100 years and do training for 100 years, and so she's going to be working for a while. She's going to be like, I didn't do all that training to retire. You may choose that, but just be nice to her while she's supporting you. I think you're in very good shape. Let's keep doing the Roth and let's stay in touch so that we can help you out and, as things change. And by the way, if we get some sort of change in the tax code, just shoot us a note so we might make a different decision. So, but I think you're doing exactly what you should be doing. And it's always good for me and Mark to know a doctor who's nearby. So we're very happy to rely on your wife to give us free medical advice in exchange for free financial advice. Does that seem okay?
I'll have to discuss with her, but I'm sure she will take that deal. Yes.
Very good. Are you grappling with traditional versus Roth? Are you trying to figure out how to do the conversion? Are you an Ed Slott adherent and you want to minimize the tax liability that you have to pay over the course of many decades? Well, we'd be delighted to help you out. Just go to JillOnMoney.com, click the Contact Us button, and we'll be there for you. While you're on the website, don't forget to sign up for the free weekly newsletter. You can buy my book, The Great Money Reset. You can subscribe to Jill on Money Live. There's all sorts of things to do. Don't forget to try to lift someone up today. It's going to make that person feel good, and I know it's going to make you feel good. Change your work, change your wealth, change your life. Thank you for listening. We'll talk to you tomorrow.